Hello, welcome to Geojit Spotlight. Stock markets have been going through high volatility during the last few months. Markets have been moving sharply up and down in response to changes in policies and events. President Trump's reciprocal tariffs declared on April 2nd had led to crash in global stock markets. Now, after the pause in reciprocal tariffs for 90 days, this has become irrelevant. Reciprocal tariffs are now part of history. The trade war that had broken out between US and China was expected to last long, but now it appears to be suddenly ending with a trade deal between the two countries. India and Pakistan conflict has ended, removing a major uncertainty. How should investors respond to this new reality of heightened volatility? The US-China deal on trade is promising for the global economy. The probability of a recession in US and sharp slowdown in China has reduced. This is good news for the global economy and therefore good news for Indian market also. However, this has a slightly negative fallout also. FIIs who have been on a sustained buying spree in India are likely to soften their buying and may even turn sellers in India. Once again, the possibility of a sell India, buy China tactical trade has increased. This has happened in the past. This means in the short run, large caps may underperform mid and small caps despite the high valuations of mid and small caps. A significant trend during the last couple of days has been the renewed interest in defense stocks. The excellent performance of India-made weapons and the Prime Minister's appreciation of made in India defense weapons have improved the sentiments in favor of defense stocks. India's defense exports, which have been doing well, will get a further boost from the stellar performance of India-made weapons in the India-Pak conflict. In FY25, India's defense exports have crossed 26,000 crores. It is important to understand that India's defense exports have multiplied 34 times in the last 11 years. This is impressive performance and the prospects look bright. Particularly the prospects of companies like BEL, HAL, Mazagon Dock, Garden Reach, Bharat Dynamics, BEML and Cochin Shipyard look bright. However, investors have to be very cautious since the stock prices of these defense companies have run up too much too fast. Therefore, profit booking is likely. It is advisable to buy defense stocks for medium to long term on dips. Dips are possible. Among the recent Q4 results, the results of Bharti Airtel, ICICI Bank, Mahindra and Mahindra, Eicher Motors, L&T, Titan, Pidilite and Cipla look promising with potential for repeat performance. More trade deals are likely going forward. The prospects for metal stocks look bright in this context.